How's it going, everyone? Nice, quick, brief quant update from myself. We saw $90 reclaimed. In my last video, when quant was down underneath $80, I had already marked out a potential move that once $90 has been recovered, the expectation would be it would hold as support and pump towards $135. We're starting to see very early signs of this, but we're not truly seeing structural breaks just yet. When $90 was lost, it was due to this lower high over here. And that's all the validation of this bearish head and shoulders pattern, this being the right shoulder. So this was the lower high created. As you can see on this move back up, although $90 has been recovered, which means that it should target at 135. It can still technically go wrong. And that's because we haven't seen that change in structure. We're still seeing a technical lower high. And with that being the case, a lower low could technically still form. And that is why, as you're seeing right now, with this rejection currently, quant must hold $85 to $90. I know I've been saying 90, but 90 was what needed to be reclaimed. Now, when it comes back down for support, I want this low to hold, which is 85. So a great step in the right direction, but we've still got lower highs. That could mean we could still see lower lows. To avoid that now, $85 needs to hold. 85 to 90 is the demand zone. So even though we've got this bearish rejection currently, we want to avoid seeing lower lows by catching support over here, pivoting off of this $5 area of demand and pumping towards 135. Why is that so important? It's so important so you can see this macro bullish double bottom form. This stays intact while $64 and $70 remain support, because this is just basic Fibonacci's. At the moment, this is just a retracement back into the most key level of support, because by losing this, the reversal wave is created and quant targets this. So by pivoting off of this area, quant has now technically avoided these bearish targets, avoided going into the bear market, so long as $65, $64 holds. So we're down here, we've spotted this bullish double bottom. It's now recovered $90. We now want 85 to 90 to hold. That will send quant back up into this $135 area. This is the neckline of a macro bullish double bottom, which would take quant to 200 plus. This is not yet fully in play, but the beginning process is. Remember, $85 now needs to hold. We should see it pump back up into there. This is now our new range right over here. So we're trapped between these 2 points. We're waiting for one or the other to break. We previously saw a break to the downside. With the recovery of this range, it's now been a deviation thanks to the support at the golden pocket over here, 786, 886, 65 to 70. And then let's show progression, confirm 85, 90 as support, so we can actually pump back to the range high. By breaking through that area, 200 is the minimal target. Like, subscribe, comment, and share. Hopefully you learned something. Let me know if you did. If you didn't understand something, let me know in the comment section below. If you want to learn the strategy, the Fibonacci strategy, use the links down below. Take action on the discount applied at checkout, whether it's on the ebook, the Discord, or the one-to-one mentorship plans. It can be very confusing and daunting when you see it like that, but it is really basic once you learn it.